everyone was saying, hey, you are going to go bankrupt and lose your pants. Peter Thiel's talk at Harvard Business School, something that was quite annoying but factually accurate.
Basically, Asians are copycats, right? Basically.
Yeah, Asia, especially Southeast Asia, don't need innovation. It just needs execution.
It made you angry and want to do something?
What happens if one of us passed away? Then what happens if you decided to go back to a family business?
So at what point you realize this is the guy that I want to go to battle with?
We actually trash out all the toughest scenarios. How we started funding societies is really how you should not run a company.
Today's guest breaks down what it really takes to build across Southeast Asia. The painful layoffs, the funding winter, the regulators who had no frameworks to offer, and the decision to go multi-country from day one, long before it made sense on paper. Kelvin Teo, co-founder of Funding Societies. His path was shaped by a comment he heard at Harvard Business School. Peter Thiel's argument that Asia didn't need more innovation, it just needed execution. Instead of brushing it off, Kelvin and his co-founder turned it into a challenge and set out to address one of Southeast Asia's biggest blind spots, the financing gap holding back millions of SMEs. They launched in Singapore and Indonesia while still in school, building credit models with almost no data and convincing regulators to take them seriously. Their partnership survived because they aligned on values early on and faced the uncomfortable conversations most founders avoid. In this episode, Kelvin goes deep into the lessons, the missteps, and what it takes to build resilience in Southeast Asia's toughest markets. Here's our conversation.
So we will start from the very beginning, the origin story. Funding Society is almost 10 years old, right? You started 2015. And where were you at that time, and why did you decide to start this company?
So I think we started in February 2015 when my co-founder Reynald Wijaya and me were doing our masters at Harvard Business School. At that time, it was really a confluence of different factors that led us to start a company. So it wasn't an epiphany whereby, hey, I want to start a company. It was really a series of events whereby we were very inspired by Peter Thiel's talk at Harvard Business School at that point in time, whereby he talked about something that was quite annoying but factually accurate, which was Asia, especially Southeast Asia, don't need innovation. It just needs execution because Asia was so far behind in terms of innovation, and that was true because at that point in time, the companies that are started in this part of the world were, hey, we are the Uber of Asia, we are the XYZ of Asia, right? Really copying the model that we have seen in the US, right? And given that we were very fortunate to be to rise up from middle class to be in a position of privilege, having very good education and professional background experience, we thought that, hey, it really makes sense for us to pay it back forward. Hence, we decided to start funding societies while we were in school.
So he said Asia or South Asia?
He said Asia, but the reality is that I think when he was referring at that point in time to China and India, but the reality is that I think Southeast Asia is even behind.
Basically, Asians are copycats, right? Basically.
Yeah.
So that kind of made you angry and want to do something about it, or?
I think angry is a pretty strong word, but I think it was slightly annoying as an Asian myself, but the reality is that it was true, and that there were so many things that we could do, and so going by that train of thought, we decided to study the top 50 innovative companies in US in the last 5 years, right? Because we realized that, hey, given that Southeast Asia is probably 5-10 years behind US, if whatever that's happening in US at that point in time would probably be just will be ahead of curve in Southeast Asia. So actually, we assessed the companies against 3 key criteria. The first was passion. We want to do something that's meaningful. Number 2 was impact. Given that our opportunity cost is quite high, myself coming from McKinsey, Accenture, McKinsey, and KKR, and my co-founder coming from a family business background, our opportunity cost is quite high. So we wanted to build something that's very meaningful for Southeast Asia. And finally, was really path to be number 1, even though at that point in time, we probably only have a set of PowerPoint decks and initial thoughts, right? So it was really by assessing the opportunities of the 50 most innovative companies in the last few years in US, we decided that, hey, peer-to-peer lending was probably the one that fits all 3 criteria. And then we further adapted the model to Southeast Asia context to really focus on peer-to-business lending, and that's where we started.
I'm curious because when I spoke to Aaron Tan from Caro a few months ago, he said, I said, why did you choose the secondhand car? It's not deep tech, it's not sexy. And he said, oh, I think about the basic needs for consumers, 衣食住行. So I need to, be on a pillar that has like a big industry and support them to innovate. So when you and your co-founder pinpoint on peer-to-peer lending, did you think about other things, was there other options, and how did you fine-tune to this is where we're gonna go, right? And how long did it take?
Actually, funny story is that Aaron Tan from Caro was our angel investor in 2015. But on a serious note, I think we actually did shortlist another idea, which is very much transfer-wise of Southeast Asia, right? But we realized that it's a great opportunity, but we don't have the key success factor to win. So I think we were actually assessing quite a few opportunities, and I think ultimately we zoomed down into peer-to-peer lending, or in our case, peer-to-business lending, as well as, say, transfer-wise of Southeast Asia. But we chose the former because we don't see ourselves having the path to be number one in the transfer-wise opportunity. And it's also an opportunity that was very close to our heart, because I think both my co-founder and I came from an underdog background, whereby my co-founder's family business was actually burned down during the 1997-1998 Asian financial crisis. They had to escape to Singapore, went back to Indonesia to rebuild the business, and almost died again when a bank suddenly pulled back the credit line. It was really the supplier that fronted them and supported them with supplies that helped them to tie through that period, and now they are one of the biggest local FMCGs in Indonesia, exporting to China, to US, to Vietnam, Philippines, so on and so forth. So I think, and for me, I came from a underdog's background. I was very fortunate to receive a scholarship to Singapore and eventually get into very good universities and professional careers. So I think for us, we feel a sense of affiliation to the underdogs. And if I look at Southeast Asia, who are the ones that are always sandwiched in between are really the SMEs. Who do we help that can make the most impact to Southeast Asia was really SMEs, right, in terms of both GDP and as well as employment contribution. Peer-to-peer lending in terms of consumer side, helping people to get married and renovate a house are good, but we don't see as much multiplier effect to the economy, to society. So why we were very focused on helping SMEs to grow. And we saw the biggest pain point was really financing. Hence, that's where we zoom in. And so why we call ourselves funding the growth of societies in Southeast Asia.
Mm-hmm. Were you always very entrepreneurial since young? Did you come from your family also run a small business?
No, my mom was a high school teacher in Malaysia, and my dad was a palm oil plantation director. So it wasn't quite an entrepreneurial background per se, but I've been very fortunate to be exposed to quite a bit of entrepreneurship in university at National University of Singapore. One of which was the NUS Overseas College Program, which was the government's initiative towards nurturing entrepreneurs, whereby we spent a year at the University of Pennsylvania, among many other top universities in the world, half of the time learning about entrepreneurship and the other half of the time interning at a startup. So that has really helped me to think about starting a business, and that planted the seeds that subsequently germinate.
In that overseas program, was that batch, did they all come back and started their own business?
Interestingly,
any known names?
Not many, but I think quite a few notable companies in Southeast Asia now all came from that program. So example, Carousel, Siure and Marcus, or Shopback, and quite a few other companies came from the same program as well. So, but within our cohort, I think we were the very few that have started companies.
And then I want to also ask you, you met your co-founder in Harvard Business School, so you were friends and classmates. At what point you think like, okay, this is the guy that I want to deeply connect and bond? Because like partnership is like marriage, right? When you get into it, there will be up and downs, there will be quarrels and fights. So at what point you realize this is the guy that I want to go to battle with?
So I think how we started funding societies is really how you should not run a company, or at least that's what the textbook tells you not to do. Like literally, Reno and I only had known each other for less than a year when we decided to start a company together. But I think one thing good about being in an MBA and a relatively relaxed and open environment is that you have a lot of opportunities to get to know each other in a deeper way if you are being very intentional about it. So when we as we're just talking about our backgrounds and dreams and whatnot, I realized that Reynolds is not a typical family business guy. Like I've noticed that a lot of people, when if you come from a relatively good background, there's a tendency for you to take a bit of a relaxed mode in life because there isn't a lot of needs that you have to address, right? But I think for Reynolds, I noticed that he has a chip on his shoulder whereby, hey, I don't want to be known to be successful because of my family business. And there's also a mission and values that drives him in life. And one thing that we did quite intentionally was that in the first 6 months when we started a company, we actually trashed out all the toughest scenarios and things that could happen. So I think usually in dating during the honeymoon period, everything is hunky-dory, right? For us, we kind of did the opposite way whereby, hey, what happens if one of us passed away? Hey, what happens if you decided to go back to a family business? What happens if things go like so and so forth, right? So the first 12 months, we had a ton of fights. We banged tables and so forth, right? But because of that period of forming, storming, norming, performing, like I can almost now predict what he would think about a particular topic. And we are very aligned in many things in terms of core values, but also in terms of actual decisioning, such that even after Harvard Business School, whereby he was based in Indonesia and I'm based in Singapore, we could still work very much in sync because of the initial bonding period at Harvard.
A lot of places where you talk about your experience in Harvard Business School, obviously it shaped you significantly. Looking back, did you think that was like a very important period and that changed your life course?
I think when I decided to go Harvard Business School, I knew that it would be a pretty powerful experience, but I did not have the intention of starting a company in school. So I think after Accenture, McKinsey, and KKR Capstone, the whole idea was that, hey, life is more than just a career, but it's really exposure and meeting people and whatnot. So I thought, hey, this is a good opportunity for me to spend 2 years in Boston amongst great people and open my horizon, right? But it was really one thing led to the other that decided, hey, we originally started whole peer-to business idea as a homework, which was rejected by the professor, and then subsequently we
met.
The
same idea.
Yeah, it was initially an idea for schoolwork, and then we were so sucked into it that we started meeting entrepreneurs who were running peer-to-peer business at US at that point in time. We started coming out with a business plan. Eventually, one thing led to the other that, hey, why not we intern in our own company by starting a company by ourselves during summer holidays? And so we put together some seed money among ourselves. We started hiring people using startupjobsasia.com. And last I checked, that website is still alive. We ran a team using Skype. So we check in at 8 p.m. Boston time. 9 p.m. Boston time or 9 a.m. Singapore time. Work with the team until 3 a.m. Boston or 3 p.m. Singapore time. That, hey, what have you achieved? So check in at the start of the day, what we're going to do, check out at the end of the day, what have you achieved, and we repeated that process also. And we paid the team using internet banking and whatnot. So it's really and during summer holidays, we're very fortunate to raise our seed round from Alpha JWC as well as Aaron Tan from Carroll, such that we're pot committed and we just take it forward from there. So and Sequoia came in, reached out to us after our seed round at our second year at Harvard through our classmate. And the funny thing was that they were asking questions and we're just replying, right? Because we are at professional services, we are used to replying things very quickly. And they asked for a meeting. We flew back for that meeting. We didn't know that's called an investment committee meeting at that point in time. And that they offered a term sheet to us, very fortunately, even before we graduated. But 2 weeks later, they put back the term sheet. It turns out that they didn't know that we were students and we're not even in Singapore at that point in time. But we were very grateful that they waited for us until we graduated and reissued us a term sheet again. So the rest is history after that.
And then after graduation, you guys came back to Asia. And were you working in different markets? Your co-founder in Indonesia, and you decided to be based in Singapore?
Yeah, so I think to a large extent, yes. I think we launched our Singapore business in June 2015. the platform was up and was starting to serve customers within 100 days of the founding of the company. But within 6 months, we launched Indonesia as well. So before we graduated, we were already operating in 2 markets, Singapore and Malaysia. Singapore and Indonesia, and we're applying for license for Malaysia. So we did. So I was mostly based out of Singapore and Reynolds out of Jakarta. But I think because Indonesia was a new business for us, I did a typical consultant thing whereby I flew into Jakarta every Monday morning and fly out on a Friday evening so that we can make sure that the Indonesian business is running smoothly and stable before I let the local team and of course Reynolds run it fully in Indonesia also. So I think we were based in different places at the time.
So basically, before you came back from graduation, your company already completed that 0 to 1.
Yeah.
You already had customers, clients.
Yeah. So I think during our first year, during our first year end of first year, starting of second year of HBS, we already had customers and we have our seed round raised and we have a team there. I think at that time, the first 6 months we only did like $3 million in terms of loans in the first 6 months, and it was a huge milestone at that point in time. Now we do like $3 million within hours and whatnot, right? But I think by the time we graduated, we have a decent size early business already, and also why we're very fortunate that Sequoia Capital waited for us, because rather than investing into our peers or competitors, because reality is that at that point in time there were other players in the market. In fact, they were running full time and they're probably ahead of us, right? But I think after the investments, I asked both Sequoia and Alpha GWC that, hey, why do you decide to invest in us? Drilled into me was that, hey, you guys are very aggressive when it comes to execution, but very conservative when it comes to risk management and compliance. And I think that, and they reckon that there's a good combination for a business of our nature.
Who were the first batch of people you hired while you were still in the US?
I think we hired 4 people. One for a credit manager, because we're in a credit risk management business. We hired a salesperson. We hired someone semi-senior who does marketing in crowdfunding, operations, so on and so forth. And then we hired a business analyst who basically does everything but on the junior side of things, right? So really 2 specialized roles, sales and credit, and then 2 more generalist roles also. Interestingly, most of them stayed at least for 5 years, and our first hire, Vikas Jain, is still with us and is currently leading our Thailand.
So what was the initial, the most difficult part? Is it marketing, or is it product, develop the product? I
think maybe actually another side story was that you'll notice as a fintech company, none of our first hires were tech people, right? So what happened was that at that point, at the early stage, no good CTO will work for 2 students who are not even physically around with the business, right? So we actually got an IT firm in Indonesia that Reynolds knew to basically build our website, our tech and whatnot. And literally we were just wireframing on a piece of paper and sending over for them to build, right? And after we raised the Series A from Sequoia Capital upon graduation, we basically told the founder of that IT firm that, hey, why not you quit your firm and then join us, and which is what he did. So that's how our initial tech team was started off. And of course, over time, we've expanded and deepened our technology bench. But that was how we started when we were still working out of the US.
So you already outsourced some of the functionality, like many of the Singaporean companies do still today.
Yeah, because no one would join 2 students at that point in time. So I was very grateful for the faith of the person. His name is called Felix Richard. So I think you mentioned about what were the toughest points in the business. I think actually there were many tough points, because I find that when it comes to a credit business, unlike many other businesses, we need to align 6 key pillars. Like product market fit is the most straightforward, right? That if I have a loan that no one wants, no SME wants, it's not going to fly, right? But I find that we need to constantly align the other 4 key pillars, right? So firstly, product market fit, but equally important is credit risk fit. If people take my loan but don't repay, the business will not be sustainable. The 4th one is funding fit. That, hey, if no one wants to fund this loan because the rates are too low, or they see that it's too risky, it's not going to work. So I think these 4 pillars is what would enable us to have a starting point for the business. But I think the other 2 pieces are what will help us to scale and be successful. The 5th one was channel fit, because when it comes to small and medium businesses, they fall under what what is called the zone of death for distribution, whereby there's no efficient way to reach these SMEs because it's very costly via offline, but it's pretty inefficient via online, right? So there isn't a very good channel to reach them at scale. So channel fit, and finally tech fit, right? That how can I convert what a business that has a high physical touch in a digital way so that I can scale efficiently and profitably. So it's really constantly aligning these 6 pillars that takes a ton of time, and that's not even factoring in that we're in a regulated business at a time whereby there were no regulations for the sector. It was a really new sector, and we have to work with the regulators to come up with the regulations, and of course apply them and be qualified for them. It was also a time in Southeast Asia, like joining a startup is not a cool thing. In fact, it's a pretty dangerous thing. So it wasn't easy to hire, and that the whole venture capital scene in Southeast Asia was very new, such that we are almost always at the valley of death, whereby we were raising Series B, there were no Series B funds. We were raising Series C, there was no Series C funds in Southeast Asia, and we had to go outside of Southeast Asia most of the time to raise, right? So we're very fortunate that we've survived the 1,000 cuts that could really hurt a company, and so why now we're the last man standing when it comes to Southeast Asia SME fintech lending.
I mean, these few pillars that you mentioned, if you can maybe give us a little bit case studies and anecdotes on how you tackle that problem. I'm personally interested in how you reach to these people.
How we tackle them, it really varies by countries and segment, because the SME business is so localized, and the factors that could result in defaults is so heterogeneous, right? It's very different from consumer lending, such that the number of risks that we manage for SMEs are a lot higher. Nowadays, I think SME microloans is very common. Everyone offers microloans. The big tech firms offer microloans, oftentimes to consumers, but to an extent for the SMEs as well. Because at that time, the offline channels were pretty fragmented and expensive, we thought, okay, let's try the online channel. But one thing you realize is that the SMEs that do apply online tends to be meaningfully smaller and oftentimes higher in risk, because it's not natural for people to go online and search SME loan applications, right? Like generally, people just walk into a bank and hope that they can get financing, right? So the question is, how do we manage the credit risk for this? So we have some level of channels, but the question is, we have some level of sense of market. So we know there's a smaller SME market also. How do we manage product and credit risk, right? So literally, we started out with a small quantum. We run with initially more of a bank plus credit model. Hey, this is how the bank's credit underwrite. We adjust it based on a first principle basis. So for example, the banks usually focus on 5 C's of credit, right? Collateral, capital, and character. If you have an asset, I lend to you. If you have money, I lend you more. If you're a good person with a character of repaying, then I lend you. For us, we look at the other 3 C's, right? So character, but also capacity, cash flow capacity, and finally condition, how do I structure the product in a way that manages the credit risk but also meets your needs, right? So we knew that a loan has to be small because the customer segments are small. We knew that a risk has to be on the higher side, but at the same time, we knew that the speed has to be fast, because these are really SMEs that really need quick cash, right? Also, and to ensure that we don't, if the experiment runs poorly, it does not hurt the entire company. We basically set aside a certain percentage of the portfolio whereby we know that we are cutting the edges of what traditional underwriting entails, such that even if the whole portfolio explodes, as an overall company, we are fine, because we have really right-sized the portfolio. So initially, we started earnestly giving a few loans via our app or our website. We were the first company to do the microloans, and at that point in time, everyone was saying, "Hey, you are going to go bankrupt and lose your pants doing this," right? But I think because we started small and we started accumulating learnings over time, now microloan is one of the most profitable and successful products that we have, even when new companies or big tech firms start to copy parts of it also. So it's really by aligning piece by piece that we started launching new products, be it in terms of microloans or property-based business loans or car dealer financing or government invoice financing, so on and so forth, that has enabled us to scale and diversify our business in a very resilient way.
Do you still remember who were your first clients, and how did you feel when you landed them?
So many of them came through PR news. So we find that that's one of the most efficient way to get your word out, right? Because people don't trust in ads, they trust in news. Sometimes even fake news, which I think this is not what we encourage, but that's how we started initially. And and through candidly brokers because we didn't have any much network or so. In fact, I still fondly remember a Lego distributor in Singapore and was starting out a shop. But later on, started out in Malaysia and Jakarta and Indonesia, whereby he needed financing to stock up. He's a fairly old uncle. So there is some level of key man risk involved in the business, but we were able to structure a product that helps him to stock up quite quickly and even launch the Malaysia business. So when he launched the Malaysia business, the Malaysia subsidiary was quite new, but we basically used our Singapore team to credit assess the holding company in Singapore to make sure that if the Malaysia subsidiary does not repay, our Singapore business, we can actually get money back from the Singapore holding company. So the Malaysia team lent to them and the Singapore team supported. And when it comes to crowdfunding side, the initial crowd was really Renault and myself, crowd of two. But over time, we managed to expand. And in fact, I was the one who landed the first crowdfunding investor. It was really exciting when he first cut us the first check or so. And I think some of the early customers still reach out to me, or we still meet at events that, hey, do you remember I invested in 2018, I invested in 2016, so on and so forth. So it's quite really grateful for their faith and support at early days, and I think they have really contributed a part to financial inclusion.
What kind of interest can the crowd funders get if they pull money into your platform?
So in aggregate, after minusing off the fees that we charge, which the thin one is, we are really just for crowdfunding, we're really being a service provider, as well as minusing off all the defaults. Investors typically get about high single digits in return. Around 8-9% per annum, as long as they diversify their portfolio. I find that initially that we had to spend a ton of time educating the customers that, hey, to diversify, right? Because some of the investors, they will read the fact sheet, the analysis, and say, hey, I have very high conviction of these customers, and put in 10% of his total money. And if one loan somehow defaults, that's 10% of the portfolio gone, right? So I think overall investors can earn about high single digits in returns after fees as well as defaults. Having said that, we realized that peer-to-business lending is a great place to start. It's a pretty terrible place to end because the business model itself fundamentally is not very resilient. But we were fortunate that we thought ahead of time and started evolving our business model such that now we have a pretty diversified source of funding. So not just crowdfunding from individuals, but we also raise private bonds on balance sheet from accredited investors. We have funding from banks, impact funds, credit funds, as well as we start doing loan channeling with financial institutions to act as a platform for them to reach the SMEs. So because of the early thinking of building resilience and diversification, we don't just preach to our investors to diversify their crowdfunding investments, so do we in terms of diversifying our debt supply, such that even through COVID period, when a lot of investors would not have money to invest, or through the multi-decade high US interest rates, which had really raised the cost of fund for companies across the world, such that because we have diversified sources of funding, we continue to scale during these market shocks.
You talked about bank. I want to follow up on that. Like, what's your relationship with those financial institutions? And when you first came along, were they just shrugging you off? And of course, now you're partners. How does that journey been?
Yeah, it's been when we first started off in Singapore, most banks were not even willing to open a bank account for us because the industry was so new, and we're very grateful that DBS finally accepted to open a bank account for us, right? I think that was how we started, and I think later we realized that, hey, while a lot of fintechs like to say that, oh, we're here to disrupt the banking system, democratize the market, the reality is that a lot of our businesses still run on banking infrastructure, right? That we are really complements to them, not disruptors, right? Banks don't lose a customer because of us, so because we're serving a different segment and needs, right? But it was something that's very new, so we needed to reach out to the more progressive banks to be able to form a partnership, right? So I think we're fortunate that in 2016 there was a Bloomberg article that published that with the title that 2 Harvard students were changing lending in Southeast Asia. And it was really a piece of news whereby we formed the first peer-to-peer business and bank partnership in Southeast Asia, and it was with DBS Bank, the biggest bank in Southeast Asia, whereby the CEO then, Mr. Piyush Gupta, responded to my cold email. We had a meeting, and within 1 month, the partnership was signed. Right, so really grateful for the faith at that point in time. But what the article did not say was, we actually co-emailed many CEOs. It's just that Mr. Piyush Gupta was the only one who replied to us.
Right.
So I think that was the start
He
of a
was also
partnership.
at the stage that he wanted to do more digitalization. He wanted to make DBS. So it's really good timing, right?
It was really a right place at the right time. But the reality is also that as a very young company, we didn't have a lot to offer because we're still building up our capabilities, right? So after that initial partnership, candidly, it did dipped when DBS changed certain management that were relevant to that particular partnership. And we went through a low period when it comes to a bank partnership because there weren't a lot of capabilities for us to offer to the banks. We were still very new. But I think the turning point came after COVID-19, whereby a lot of the banks see that, hey, these guys survived COVID and survived pretty well. And after 7 years of, actually 6-7 years of capability building, hey, they have something to offer that we may be willing to consider. And they were willing to admit that they probably can't do or they're not set up to do it also, such that we started having more forms of partnership with the banks, right? To the extent that we currently have some of the biggest banks as our investors. So SMBC from Japan, Maybank from Malaysia, BRI from Indonesia, as well as Cathay Financial Group from Taiwan are our shareholders now. So really grateful for the gradual turn in attitude, but there's still a lot more to be done in terms of convincing the naysayers within the banks to partner more with us.
Now, Singapore's fintech ecosystem has evolved quite a lot, and you just attended the 10th Singapore Fintech Festival. You kind of also witnessed that ecosystem growth, right? Maybe can you share with us where do we stand and how was it like 10 years ago?
I think when we first started in 2015, I think fintech was very new. You need to always say fintech bracket financial technology because otherwise people wouldn't even know what you're talking about, right? And we're very grateful that MES was really a first mover in terms of regulating and encouraging fintech at that point in time. And one of the key flagship initiatives was the Singapore Fintech Festival as well as a Fintech Award, which we were very grateful to be recognized and won an award during the first year of Singapore Fintech Festival. But I think how it has evolved is that it started off with many smaller companies at the time that, hey, it was cool, let's explore. So there were a ton of players in the market to gradually in around 2018 to 2020, the market started maturing, but there were still quite significant players also. And then I think after COVID is really when the market consolidation really accelerated to be to have several key market leaders in each of the fintech vertical. To now you start seeing a next generation of fintech companies whereby it's not just, hey, lending, insurance, wealth management, so on and so forth, but rather, hey, how do we think about crypto, Web3, AI, blockchain towards layering on the traditional financial services, not just driven by technology, but new technology as well. Similarly, I think the earlier generation of fintechs is not just fintech startups, but gradually maturing as fintech companies in the ecosystem, right? So I think that is really a testament to both the regulators, but also the ecosystem and founders who have made this possible in Singapore and Southeast Asia.
Funding Society now is at what stage? You're revenue generating, but you're not profit generating yet, are you?
We are at countries level, we are profitable in Singapore, Malaysia, Indonesia. But for new markets, it typically takes us about 3 to 5 years to be profitable. So we entered Thailand and Vietnam in 2022 or so. So the two new markets are still not profitable. But I think one of the interesting points is that we entered into payments in December 2022 by acquiring a Series A Sequoia-backed company called CardUp. And
CardUp
it has really diversified our business, right? Not just on lending, but also in payments, right? And that it was a great experience in terms of M&A, of course, merger, whereby how do you think about post-merger integration, integrate a team, build up new capabilities? Because why we did an acquisition is because we don't think that we can build up the capabilities, get a license, build the products, grow as fast, right? We find that by acquiring is a faster pace, and we were very fortunate that the integration went very well, such that the payments business grew 6 times in 3 years from $250 million in GTV to $1.6 billion, and it is a profitable business as a standalone. So for us now, it's really how do we pace our growth as well as mature the new countries profitably, so that the entire group is profitable before we enter the 6th market for us.
Interesting. Can we maybe dive into a little deeper on the merger and acquisition? Because not all startup companies have that experience. So you walked that path, and what have you learned?
I think there were, of course, standard playbooks that we learned at McKinsey about how do you do M&A and whatnot, right? But I think a few things that are quite non-obvious. I think number one is that um, ultimately it's really a partnership of the people within the organization that matters, right? I think oftentimes I find conversations of M&A are overly reliant on the piece of paper that binds the two companies together. But the reality is that you can never be comprehensive in terms of legal contracting, and things do change. Even if it comes to, let's say, earn-out planning, right? That, hey, you're going to stay with the company for N number of years, these are the targets. But it's also a very murky area because after the deal, some of the functions are not within the control of the acquired entity yet, and the macro context may change, right? And it could make it quite unfair to the acquired entity or the acquirer when it comes if you hold each other into certain terms that you could not foresee whether it still makes sense at that point in time also. So I think that a large part of the M&A deal is really knowing the people that are running the company as well as the values. Almost similar to the exercise that I did with Renault when we first started the company in 2015, right? That, hey, let's trash all the hardest things also. Let's avoid the hunky-dory, hey, we like each other conversations and really have the tough ones up front. That I think will help us to keep to integrate the team. And we are very fortunate that a large part of the core team remains with us and find that they can build a career within financial societies as a whole. And which is quite different from what we saw in some of the other deals in Asia, whereby I find that oftentimes founders leave after their earn out, which I find is a bit of a sad thing, right? That we will only take up an M&A deal if it gives us a platform to grow even bigger rather than just encashing and then leave the company per se, because we fundamentally believe in our vision and mission of empowering small and medium businesses in Southeast Asia.
Is there any new markets that you're looking at? Are you going to stay in Southeast Asia or are you going to venture out?
I think the focus now is really going deep in Southeast Asia, because we talk about every new market takes years to be profitable, and we want to be fully profitable within the next 12 months or so, and such that I think for us, we are focusing on deepening the existing market. And I think that is a great time because US had just cut rates in September last year, which has really triggered a huge rebound in our overall lending business. We also have further diversified our funding sources by setting up a wholesale credit fund in Malaysia, by having a significant capital coming from emerging markets that we just entered, like Thailand, by working with digital banks in the region that are very much focused on consumer lending, but see value in SMEs and see that it's better for them to partner rather than distributing them up themselves. So we are working more and more with digital banks. And I think the increased market consolidation has really enabled us to build capabilities for long term, build up more deeper product features, especially in markets like Indonesia, whereby I think there's a lot of bad press in Indonesia in the last 12 months or so for various reasons. But because we were very conservative in Indonesia for the last 2 years, when others were aggressive, now turns out to be the time for us to actually grow quite healthily in Indonesia, because we have taken a contrarian view. So I think for us, the focus is really deepening our existing markets to be fully profitable in the next 12 months.
So for the international MNCs, when they look at Southeast Asia, they look at it as the fourth largest economic bloc, 700 million middle class, etc. But we Southeast Asians know that this market is so diverse, and the playbook for each market is very different, right? So what can you tell like a Chinese company say want to come to Southeast Asia?
Just partner with locals like us. Because I think the reality is that even for locals, it's not easy for them to build a regional business. In fact, when it comes to SME fintech lending, SMEs are even more localized than consumer business, right? Such that within our vertical, we literally are the only or the main multi-country player. Most of our peers are in one country only, or maybe having a small outfit in the second country, right? And to me, that's quite dangerous, because in emerging markets, there are market shocks and you need to watch out for the tail risk. So having such a concentrated business in a single country, in my view, is quite dangerous. So why we actively diversified between lending and payments now accounts for 30% of my revenue. And when it comes to lending side, we further diversified across 5 countries, across asset-backed and unsecured lending, so and so forth, to give a ton of resilience to the business, right? So for a Chinese company or any foreign company coming to Southeast Asia, serving the B2B space, it is tough, because it's tough even for the local players, right? And I think partnering with the local players will probably be the easiest. But I think what we have done differently to build a regional business is that we knew that diversification was important. We knew that SME lending is a high volume, low margin business. So we knew that we need to end, and we also knew that it takes the gestation period for you to build capabilities are very long. Because the data is scarce, it takes time for you to build up your credit, to get loan repayment data, to build up your credit model. And because the loan quantum is relatively big, you can't just burn money to get those data. You really need time for your loans to mature, to actually train your credit model before scaling up, right? So we knew that we need to be regional on the first day, such that even before we graduated from Harvard Business School, we were already in 2 countries, right? Singapore and Indonesia, and we're preparing for a third one in Malaysia also. I think how we have done it is that we have actually empowered the local team quite significantly, because we realized that local regulations, local market opportunity, local credit risk, they will know it better than I sitting out of Singapore per se. But at the same time, besides empowering them, we need to provide support infrastructure in the form of launcher. So we typically send someone that has been with us for a long time, who shares the core values, who knows the business well, to be in a new market, to work with a team, to build up local leadership and team when we enter a new country. I typically stay very close to a new country, such that I visit each of the country once every month or once every 6 weeks. And given that we have 5 countries, I'm flying almost every week to make sure that I'm close to the ground, close to the customers, close to the team. But also on top of that, build group infrastructure. So any functions that benefits from scale, that benefits from cross-learning, that helps us to enhance learning and controls, we actually build up at a group level. So for example, product data engineering, finance, risk, compliance, legal, so on and so forth. We have it at a group level as well, such that when it comes to credit underwriting, it really goes through 3 layers of capabilities, right? So the local credit heads or credit teams, the group data science team, as well as a group enterprise risk team, to ensure that we balance between local nimbleness with group discipline and control and cross-learning.
When I go to your website, the impression is you put a lot of emphasis on vision and mission. Is that something that you thought through from the beginning?
Yes. I think why we call ourselves funding societies plural is because we really want to help more than just one country, but really help the region to grow, right? Because we do think that if we do not take advantage of the digitalization trend to help Southeast Asia's economy to develop, there's a very high risk of being stuck in the middle class trap, or even worse, at the relative poverty economic status once the demographic dividend in Southeast Asia runs out. So the window of opportunity for us to uplift Southeast Asia is really within these 5-10 years or so, right? When the population is still relatively young and people can gain efficiency through technology like digitalization, and most recently by Gen AI, right? Hence, the tagline of stronger SMEs, stronger societies actually came since 2015-16 when we first started the company. And it's really what we set up ourselves to do, right? Like sometimes people ask, like, what is life after funding societies? The reality is that I really enjoy doing what we're doing, despite being quite painful and tough in our daily basis, because addressing the SME financial inclusion problem is a very tough one, right? But we really enjoy doing what we're doing, and therefore we do hope to continue doing, as long as I'm still qualified to lead the company and make it do right for the team as well as for SMEs in Southeast Asia.
What was the most painful experience you had in the past decade, like the darkest moments?
There were so many dark moments. I think 2 weeks before graduation, a regulator announced with immediate effect that we need to get a license, otherwise we need to stop operations. And it was really triggered by the explosion of P2P lending at China, right? And at that time, Sequoia has not closed the equity investment yet. In fact, they were still going through legal due diligence. And with immediate effect, I have to stop one country's business because it will not pass the legal due diligence. Like, that's really painful. But we're really fortunate that we pivoted the business from off-balance sheet to on-balance sheet lending, from term loans to invoice financing, and started applying for license, even though we don't know how long the license will take. And we're very fortunate to convince both Sequoia as well as the head of legal there to believe that we'll make it right, even though that new announcement could have resulted in our business losing 90% of our business at that point in time, right? We're very fortunate that we adjusted. That month, the business continued to run and grow among all those craziness or so. And we were very fortunate that Sequoia stuck to the deal without even changing the terms with us, right? So that was a tough moment, but also subsequently when we entered into Indonesia, where regulations was quite new, how do we engage regulators in a respectful way, but also meaningful way, in a market that's relatively unstructured. Subsequently in COVID-19, whereby we were the first company to do a layoff among tech scene. At that time, it was very, very new. But I think the writings was on the wall such that, hey, we're expecting a certain growth rate, and that's matched by our cost structure. But the growth rate is unlikely to happen because of revenue, of course, of COVID-19. Therefore, we need to take early actions. And because we knew that almost all companies have to do that, we decided to do it early so that the team members can find jobs before others started making cuts and compete for jobs, right? So at the end, our thesis was correct. The team members all got very good jobs with Grab, with Facebook, with Amazon, so and so forth. But we were destroyed in the media, in our online reviews, because at that time people were not used to take layoffs, right? Like, of course, 6 months later, 12 months later, like almost even the biggest companies all did it, right? But people are not going to come back and say, hey, I want to give you a good review for doing it early, right? So people don't remember. I think we're grateful for doing what is right. And then subsequently, of course, when we enter new markets like Thailand and Vietnam, they are quite tricky because they're not they are very nascent when it comes to fintech. And of course, the whole fundraising scene whereby there was no money in Southeast Asia. We had to fly all the way to Korea. Landed at 6, 7 a.m. The hotel was not ready. My co-founder and I had to go into those open bath houses, have a very open physical moment, and then go to pitch at 10 a.m. and manage to raise Series A from South Bank Korea to even the funding winter. The rate hikes, which resulted in which puts our asset liability mix at risk, and we have to quickly pivot. And of course, funding winter, how do we overcome that? We were very fortunate last year in 2024, we raised an oversubscribed round during a funding winter led by Khazanah and Cool Japan Fund with participation from Maybank as well as Cathay Financial Group, so and so forth. So I think there have been many, many moments like this whereby both macro shocks and internal has resulted us in having to pivot. But just quoting one founder that I met today, right, that it sounds dramatic when you think about it from a high side, but I think during those moments, I think our focus is really that, hey, how can we just get through this? What is the next step that we need to take to improve the situations, right? And it's really just by biting the bullet, by believing in a mission. But I think equally important, because of the trust of the team, that they've actually committed a good part of their career and their youth to the mission of the company, such that it keeps us going, right? That, hey, it's not just a company for myself or for my belief, right? But hey, how do I make sure that I bring as many people as possible within the company to the promised land of building a successful and lasting company in Southeast Asia?
Mm-hmm. So, I mean, what I understand is there's all these uncertainties, right? As a leader, you have to deal with. But how do you keep your sanity, right? Do you, we look back, but when it happens, do you just, okay, I have this shit is hitting the fan, I have to deal with that, and next, how do you keep the, the stress level at bay?
Maybe I'm still insane, but on a serious note, I think the McKinsey training has been tremendously helpful from a logic perspective, such that we were very fortunate to predict some of the upcoming changes before it happens on a first principle basis, even before the market realizes it, right? So that was very helpful. But I think on the emotional side, making sure that I stay close to the team, which allows me to be close to the customers, as well as having some level of personal life, I think it's very good counterbalance towards ensuring
some level of personal life.
Yeah, the reality is that
does your wife like that percentage?
Like literally, I was still doing calls during honeymoon period and before my wife delivered, right? But I think we try to optimize. Like if I can't give quantity time, I give quality time, right? So there's no work-life balance. It's work-life integration. Work-life balancing is having a very understanding stakeholders at home also. So I think that has helped us to stay grounded because we're always close to the team. And know how they're feeling so that we don't lose touch even as we scale up the company. Also gives us perspective outside of company with family.
People like to ask female leaders, how do you balance the career and family? I'm going to ask a male founder, how do you balance?
I think, I'm not sure we are unbalanced, but I think things are still holding together so far. I think quoting the advice of one of another founders, because we stand on the shoulders of giants. So before the baby was born, the co-founder said, set up support infrastructure. So hey, making sure that hey, we have a big enough place for the in-laws to stay in, because it's better for the wife to quarrel with your parents-in-law rather than quarreling with your own parents. Also, like setting up, having nannies, helpers, and so forth, right? I think those support infrastructure has been tremendously helpful, such that I can focus on high quality time. I think also trying to carve out time for yourself as well as for the family, by setting up routines of sending the baby to school, being at home when you're not having to fly. So I try to optimize my flight such that I fly 3 days a week when I need to fly, so that it's at an optimal curve whereby the country that I'm visiting don't feel that I'm just visiting for 1 day or 2 days. It feels that I'm there for some time, but not long enough to be a nuisance to them, right, or a disturbance to them, right. Similar for the family, that I'm at home sufficient time and I spend high quality time with them, so that they feel my presence also. So I think I found that different founders have found make it work differently. Also really grateful for the family to be very understanding, such that sometimes even when at a playground I'm taking calls and they're fine with it. Obviously, they will hope that I'm fully present, but they've been understanding and supportive in the front. So I think really set up support infrastructure and having supportive stakeholders and making routines that has helped.
So logic, so logical. You mentioned early on the funding winter in Southeast Asia. Are we out of the woods?
No, far from it. I think, in fact, Southeast Asia is going through a pretty tough time whereby I think in 2024, even though it was the funding winter, there were still investors that were willing to look at Southeast Asia, and all we need to do is to prove that we are good. And because we are good, we just need to communicate that, going through the due diligence, find it, and that's fine, right? I find that in the last 12 months, because of some of the happenings in Indonesia, and because there's a huge pool of sucking of capital to the US when it comes to for AI investments and whatnot, some of the investors are actually categorically not even looking at Southeast Asia, such that you can't even prove you're good because they're not looking at Southeast Asia also. So that's actually a pretty tough time, which for a lot of startups in the region. I think two things are hopeful, right? One is that I think a lot of companies have improved their financial profile as well as profitability, as well as strategic market position tremendously during the last 12 months, such that the ones who survive tends to be pretty good quality businesses, notwithstanding the funding winter. But also, second factor is that I do think that there will be contrarian investors or fundamental investors who will eventually realize that actually the fundamentals of Southeast Asia remains good. Actually, the quality of the stock of company that have survived are even better than before. Yet the price are a lot more rational and probably sometimes even close to public multiples now, such that it becomes a good investment opportunity before other people realize it. And I do think that this vision will come to pass, whereby within the next 6-12 months' time, there will be a return of investors. Not a big pool, but I believe the contrarian ones who will notice it and start making investments in the region again.
You mentioned this AI frenzy. Do you see that people just claim they're an AI company and then they get more funding, or does that frustrate you? And how do you see that trend?
I think there is definitely an element whereby, again, quoting another founder, that another investor whereby everyone is looking at AI, but you need to differentiate between which ones are real and which ones are fake, or which ones are still in the process of faking to be real. Also, and I think it's just human nature and herd mentality that you find comfort in momentum, you find comfort in the crowd, such that people all crowd towards it, right? But I think also it's human nature that and just basic economics that it will come a time whereby there's too much investment chasing a more limited pool of opportunity. And in fact, you already start seeing that to an extent in the public markets, whereby the question about the ROI of AI in certain verticals may or may not be as sustainable as one think, right? So I think we go through cycles like this, and there will be a normalization eventually. And I think that's also helpful for Southeast Asian founders, because we did go through a pretty extended period of low interest rates, and people did not realize that actually market can change, right? And would inevitably change. So I think one big lesson that I've learned over the last few years is to make sure that start looking at macro cycles and not be overly fixated in a micro trend, because some of the trends are not like human natures will always guide behaviors, but some trends will still stay, and I think that's how we stay ahead of the game, by predicting or having a view of what's the future and aligning our organization towards it.
At the beginning of the podcast, you said when you were in Harvard, Peter Thiel said Asians are copycats, and 10 years later, I don't know if you got a chance to talk to him again. How do you see the innovations coming out of this part of the world?
he was a lot more diplomatic when he said that Asian doesn't need
Yes,
immigrants.
yeah.
In case
We're
I
just
get a legal letter or
paraphrasing.
not. But I think, but on a serious note, we did speak to Peter Thiel's fund. I think I met him once after as well. I did mention he was just smiling, smiling. But one thing that grateful that he said what he did, because it was like his book also said, right? What are the truth that not many people realize or agree with, right? So as a truth teller, he actually got us waking up and being inspired to actually do something for Southeast Asia. And I think what he said at that point in time was definitely true of Southeast Asia or even Greater Asia. But I think eventually you notice that the market also evolved such that the business model at times in Southeast Asia is even more evolved than what you see at our Western peers, right? So what you will notice that be it in terms of Harvard Business School, Western education, Silicon Valley, or even McKinsey, there's this whole trend that you should do one thing and be 10 times better. And I think that's very true for a very developed and relatively homogeneous economy like US, right? Whereby the competition is so stiff, the only way for you to succeed is to be 10x better than your peers. But because it's such a developed and relatively homogeneous market, doing one thing very well can make you a very, very big company. But notice that in Asia, that's not a business model that works, because it's still emerging, it's still fragmented, infrastructure is not as developed, such that you almost certainly have to do many things. It's just like in US, it's like an Olympics pool whereby everyone is fighting for the split second, whereas in Asia, it's a Pacific Ocean whereby you don't see your competitors that near competing with you, but you may be just swept off by the waves of the sea, and then you just drown by yourself, right? So you notice that the business model in Southeast Asia is a lot more broad. A lot more broad in terms of, hey, I don't just do term loans, I don't just do invoice financing, I do all forms of short-term financing, ranging from term loan, trade, receiver financing, payable financing, supply chain, distributor, revolver, so on and so forth. You get, like, you name it. As long as the fundamental capabilities is really product structuring, it's really cash flow underwriting. So I find that the business models in Asia or Southeast Asia has really evolved, at times even outpacing what you have seen in our Western peers, because it suits our market. Doesn't mean that the Western peers should copy the model, because the market context is different. But I do think that real innovation is happening, and at times being better than our Western peers.
Looking back, is there any belief that you strongly held 10 years ago that now you think, oh, I was being naive?
Oh, so many. I think there are so many things that I realized the textbook taught us was not very true, right? For example, the whole idea of, hey, employee stock options is going to drive sense of ownership. Like, it's not quite true, because we find that statistically it works for the middle management to senior management, but actually from a junior team member's perspective, they still don't appreciate it as well, and it does not drive or change behaviors as much also. Like the whole point about Radical Candor by Netflix is great in the American society, but in Asia, like when you start implementing this, you'll notice that team members like Radical Candor when it's in their favor. Like if you flip it the other way around, that, hey, should we publish everyone's performance review and be really open in terms of feedback when it comes to Radical Candor, even though it's out of care for the team members' growth as well as organization's development, people are less receptive about it. We take a bit of a Lee Kuan Yew approach, whereby we don't necessarily just adopt what it works in a Western or even like Asian society in China or India, but on a first principle basis, why is this principle being set up, and how do I adapt and fact check that it works in our local context also. It's also why we have made quite a few contrarian decisions compared to our peers, right? Most of our peers would, or even investors, say that, Kelvin, you are insane to enter into Indonesia before even graduation, because you're imposing yourself in a ton of regulatory risk and actually credit risk as well. But now Indonesia is a very profitable business for us after going through the cycles and whatnot. So I think by focusing on first principles, we've been able to make contrarian views that have helped us to succeed over time.
I absolutely agree with you, because at the end of the day, it's about the people, right? You can't use what works for Americans or Chinese to be on Singaporeans or Indonesians. Speaking of people, how do you get good talent? And that's, something all business struggles with, right?
I think the thinking has evolved over time. I think that one thing we have been very fortunate that we have built a pretty strong culture such that the attrition rate has been on the lower side, especially for regretful attrition. But equally important is that if anyone actually does leave the company, they tend to 80% of them leave within the first 2 years because we are not a good fit for them or they're not a good fit for us, right? But once you cross through the first 2 years of forming, storming, norming, performing, the whole 4 stages of team evolution, most people actually tend to stay for quite long within organizations. So we've been very grateful that we built an environment that people see it as a good place to build a career. But I think when it comes to talent management also, I think a few things that have worked out well for us. One is that I think from a logic perspective, we try to create an environment that they enjoy working, be in terms of culture, instilling of culture, in terms of clarity of goals and targets, in terms of communications, in terms of performance management, so on and so forth. So for example, we have been given feedback many times that, hey, the information that we share at Town Hall is quite extensive compared to many other companies. Or like sometimes when I interview folks that what's the revenue of the company they're in? And many people are not even aware of the revenue of the company they're working in. It's like, if you don't know about the revenue of the company, how do you improve it? Also, how do you know where the company is going, right? So I think we have built a lot of infrastructure internally to ensure that logically people stay engaged and it's an environment that people enjoy working in. But at the same time, on an emotional perspective, I think Asians, you don't just work because it's a good fun place, but because you enjoy the people that are working with, right? So the leaderships and what we call captains tend to stay quite close to the team as well. Like we do a lot of skip level meetings, we have social events, we have new joiners tea so that the new joiners can have a direct conversation with me, so and so forth, so that people feel accessible to the leadership and that the overall organization is relatively flat. But moving beyond that, like logic, emotions, and what is next for us, right? I find that Southeast Asia has a limited talent pool. And I think that's what I think many people recognize that, right? But one thing that we have learned from actually Carol Arendt is that he seems to have always mapped out the talent that he needs in a few years' time right now. So they start building relationships so that by the time the organization needs such talent, he has already known them and they are very willing to join. Right? So we're starting to move from reactive to proactive, that, hey, I have casual coffee chats with the various senior leaders in other organizations so that by the time at some point I need them, or if our paths connects, be it for partnership or be it for talent acquisition, we will already know who to hire and reach out to also. So I think that moving from reactive and proactive is something that we're really actively doing now. Also partly because the company is pretty near profitability and I have more luxury of time to start thinking forward rather than just fighting for the current and now as well. On top of building future talent base, I think we've also been honored and grateful that we have also built talent base for others in Southeast Asia, right? Such that I think we have about 1 to 2 dozen of ex-funding societies folks have eventually started companies themselves, sometimes taking the core values of the company into their own organization, and that's also enriched the ecosystem.
If you can give your younger self an advice, what would you say?
I think if I've known the pain that we'll be going through, I'm not sure if I'll start a company. But I think the reality is that being quite grateful for all the lessons and mistakes that we have made, right? I think the reality is that if I start a company again, anew now, I will have avoided a ton of mistakes and things that we've been through, right? But the reality is that at that point in time, like what the whole book, The Hard Thing of Hard Things, right? A lot of things that seemed logical at that point in time, on hindsight can look really foolish and can really cause troubles to ourselves, right? So I think I try not to overly beat ourselves up for past mistakes that A, is not very healthy, B, it's not very constructive, right? But any lessons learned, sure, let's take it forward from that front also. And I'm really grateful that the mistakes have not sunk the company or such that it's non-recoverable, and we're very grateful for the opportunities and candidly luck such that we're now in a pole position when it comes to SME fintech lending and really on track to build a lasting and impactful organization in Southeast Asia.
When I ask this question to other founders, a lot of them say buy Bitcoin or like.
That's what my co-founder did. Like, if I put in a bit more money on a Bitcoin, I think it would have raised our Series DEF like altogether.
Coulda, woulda, shoulda, right? If you were not building founding societies, Kelvin, what would you be doing, you think?
I think I would probably be back in private equity, whereby helping others to build a successful company, right? Because I think while I did not start off thinking about I wanting to start a company besides joining an entrepreneurship program, one thing that guided me was that we spend a ton of time at work, and your life at work to a large extent is really driven by how the management is. So if I can help the management to be better management, companies can be running better and lives of people can be better because of better work environment. It's so why I started my career with Accenture and McKinsey in management consulting, right? Trying to help companies to be better companies also. And eventually private equity to round out my skill set. Again, it's a bit of a contrarian view, right? That I started Accenture because I know I need to know enough about IT. And then I went to McKinsey when everyone was doing strategy consulting. I spent half of the time doing operations execution, which was a dirty work at that point in time. But I realized that all McKinsey consultants can do strategy. How do I be one up them besides knowing IT, right? It's about operations. And of course, after knowing strategy operations, how do I think about as like an investor at KKR and whatnot, right? So I think um, the whole idea was really helping companies to be better companies so that lives of people are better. So I probably would have gone back to private equity, but be a lot more hands-on in terms of really trying to be helpful for the organization rather than just coming in and cut costs or coming in to push for targets.
Where would funding societies be in 5-10 years' time?
So I think for us, the vision is really to empower small and medium businesses, right, by solving first their biggest problem, financing, and then subsequently the other problems like how do they do financial management and payments, right? Hence, we actually acquired CardUp in the process also. But I think what we aim to do next is really we are really building the individual building blocks of being a unified digital finance or cash flow platform for small and medium businesses to use when they want to grow in Southeast Asia. So we realized that when a company wants to grow across the region in Southeast Asia, it's actually quite painful because when you go into a new market, your subsidiary is not going to get financing and sometimes equity money can't flow as easily, so on and so forth. And similarly, when it comes to payments management, you tend to have a few dozen of bank accounts in different currencies for different purposes. And we ask them like how much money you have, because cash flow is king. It'll take time to check the dozens of bank accounts to know the bank balance, right? So I think for us, we're trying to build a unified platform whereby whenever any company is expanding across the region can just tap on us for short-term working capital loans, because for let's say for a Malaysia company expanding from Malaysia to Indonesia, my Indonesia team will lend to you in Indonesia using your Malaysia headquarters as for recourse for repayments, right? So they can support your growth. Or even when it comes to payments, well, most of our payments business is now in Singapore and Malaysia. How can I actually help SMEs to move money easier and cheaper, right, across the region also? So really trying to eventually deepen our lending across the different markets, maybe adding Philippines into the mix, and then subsequently expanding payments across the different markets and eventually integrating all together so that as a single platform, we can empower small and medium businesses to grow in Southeast Asia.
Are you eyeing for an IPO or?
For us, because we're in a risk management business and we know that an IPO or a trade sale is oftentimes not within control. So we always think about from a scenarios perspective and we have multiple plans running at the same time, right? But I think for us, we are exploring both routes, be in terms of listing as well as a trade sale opportunity. When it comes to listing, I think we've been fortunate that 6-7 exchanges have reached out to us across the world, and we have shortlisted and know like which are the ones that are probably more realistic and feasible within the next few years or so, and just getting ourselves in a good shape to be ready when the opportunity comes. Meanwhile, we're also speaking to various players because these are inbound, right? They've come to us. Why not talk to them also? For big global fintech companies who want to expand to Southeast Asia, because we currently are in 5 countries with 11 licenses that are very hard to get. So we become a good entry point or good company for acquisition for any global fintech or tech companies that want to come to Southeast Asia. And for us, the whole thinking is that if there's any bigger organization that gives us a bigger platform to fulfill the vision to enable small and medium businesses, by all means, happy to join forces together and be part of a bigger organization.
Lastly, Kelvin, just about you, like what do you like to do apart from building funding societies?
There's a lot of free time after that, but I think
after that and family, no time.
Yeah, actually, that is quite accurate. But I think given that we're a risk management business, I do some side investments or trades myself as a semi-entertainment, right? I'm also trying. So I enjoy doing foreign exchange and crypto trading. Again, is really ad hoc because you don't have a ton of time. I enjoy playing poker with the crew. Again, it's a risk management business, and of course, I enjoy running. So I did 6-7 half marathons last year. Because it's just a good optimal point that you don't have to train so much for a full marathon, but also it's not like a lame 10 10-kilometer run, right? So that I still need to push myself rather than just a very easy endeavor. So I really try to balance it.
How many times do you run a week?
Used to do more, but now it's closer to about 2 times a week. So 2 times a week is enough for a half marathon, but if it's a full marathon, 2 times is definitely not enough.
Is there any book or movie that you would recommend that you think like, you inspired you, changed your thinking?
This is something that the Sequoia investor partner introduced to me, right? I think it's called The Philosophy of Money. It's a pretty old book. There are a lot of good books, and this is a pretty old book also. But I realized that given a risk management business and money is such a big part of a person's life, you'll notice that actually smart people make fairly stupid decisions when it comes to money, because ultimately it's a pretty emotional decision also, right? And sometimes people are not even self-aware to recognize it also. So I think as Southeast Asia reached a stage whereby founders have been around for 10 years or so, and of course started to have families, and people who are looking to start a company need to start thinking about the future rather than just the next 5 years or so, because Southeast Asia startups does take longer time to hit maturity and scale, right? On average about 12 years actually, as opposed to 7 years in the US and whatnot. I think that recognizing a relationship with money is very important. So actually I would recommend this book called The Philosophy of Money.
Thank you. Okay.
That was Kelvin Teo, co-founder of Funding Societies. If you enjoyed this conversation, please share with a friend, like and subscribe to our channel. That really helps. See you next time.